All right, traders, in this section, what we want to do is I just want to give you a very basic fundamental overview of charts. And what we have in front of us here is we have a chart, and this is a candlestick chart. Um, each one of these, this is what's called a candlestick, and we're covering this section next. But each one of these is called a candlestick, and this represents the high, low, open, close over a specific time period. This is a daily chart, a Euro US dollar daily chart, and each one of these candlesticks represents the trading activity, the high, low, open, close for a 1 day period. Now, the charts can be broken down into smaller periods, larger or smaller periods. We can have monthly charts, weekly, daily, 4-hour, 2-hour, and so forth, broken down to as low as a tick chart. Now, let's just have a look at some of our other charts. So this daily chart, where each candlestick represents a day, covers a time period. On the bottom here we see it covers from the 1st of November 2006 to the 22nd of June 2006. However, if I want to look at more time, I can simply compress the chart going all the way back here, for example, to 2004, and you can go well back on other time frames, 2003 and so forth. Now let's just break this down. Actually, let's start from the top. What we'll do is the first chart we'll look at is a monthly chart, and this chart, each candlestick represents 1 month of time period, so of price action. It measures the low, the high, here's the open, and the close for this time period. It was a bullish candle. This goes all the way back to 1993. Now if we break this down, we have a weekly chart. Each candlestick represents 1 week of trading price action. And then of course we have our daily chart, where each candle represents 1 day. And let's just have a look even lower. We're going to go all the way down to 15 minutes. This is a 4-hour chart where each candlestick represents 4 hours of trading price action. And what it does now is it starts to give us a magnified view of what's happening in price at a current time. So for example, if you see this candlestick here, you see how it has a long wick up and a long wick down and a very small body. We're going to now have a closer look at what that appears like on smaller time frames. So this is a 4-hour time frame or 240-minute time frame. Now we'll go down to the 120-minute time frame. And here again is that candlestick as it appears on a 2-hour time frame. As we continue to magnify the view, and we'll go down to a 60-minute or 1-hour time frame, and this is what the price action looks like on a 60-minute time frame. Again, we're starting to bring a focus or we're starting to magnify the view of the chart. Let's reduce it further to a 15-minute time frame, and this is the price action that occurred during an economic report today. Here's the price action. As we can see, we originally could see this in a 4-hour time frame where it was one candlestick high and one candlestick low. But as you see here, it actually took this is a breakdown of how long it took for this price action to unfold. One other item that I want to show you is this is a bar chart, and this is simply measures each bar. Rather than a candlestick, we have a bar, and it measures the high, low, open, close. As we see here, this small bar to the left represents the opening price. Down here at the bottom of the bar represents the low for the time period and the high for the time period, and then the bar to the right represents the close for the period, and this green suggests that it was a bullish time period or a bullish candle. Let's have a closer look at these charts and what we can do with them. For example, Here we see this is we're going to learn all about these candlesticks and price swings and how to analyze these charts. But what the charting software does is, first of all, allow me to differentiate between a charting software and a dealing platform. A dealing platform is a platform which is a brokerage firm, and they provide a data feed or a price feed through whom which you will make your transaction, your buying and your selling transactions through the brokerage firm. Now each of these brokerage firms, they'll provide a software through which you interact to make your executions, your buying and your selling, and taking your positions. But the brokerage firm software will also provide charting services within the software, but typically they are of poorer quality. And some of the brokerage firms do offer very good quality charting, but most of them do not. And the ones that are good actually are very handy because they typically offer them for free. You have another option of going with a third-party software provider such as this one. This one here is one that I like, and it's called Fibonacci Trader and FibonacciTrader.com. And I just like the software. It's a third-party software. I pay a monthly fee for it, and what it does is it allows me to do my analysis and make my decisions based off this software, and then I would move to my dealing platform in order to make my executions and my trades and manage my trades on the dealing platform. But I use this software for my analysis. And for example, we're going to be learning about trend lines and various tools to apply and to use on the software. And for example, just a horizontal line, or as another example, we have Fibonacci retracement software. There's just a huge host of different tools and applications that we can use on the software, as well as we can see here. The software is quite versatile. As you know, we can compress it to bring in more data, or we can expand it to get a larger view. And so these are just some of the flexibilities that we can use with the software to help us with our trading, and just to make things easier for us as well. We can simply write notes to ourselves within the platform here, and so for example, you can make notes to yourself in the platform just to help to remind you of different things that are happening